Good morning and a happy Friday, ladies and gentlemen. Hope everyone's having a good day so far. We are going to get your day started off right here on this Friday, April 25th, 2025. Relatively quiet overnight session. Trade talks were relatively quiet. We do have a Time Magazine article out, interview with Trump on his first 100 days. He did say a few notable comments there that we're going to go over. We're going to talk about something that traders are circulating here this morning, the Zwag breath thrust. Christian's got a unique perspective coming from a source that we have on the show quite often. Of course, we're going to talk earnings here today. We had Google, we had Intel last night, we had T-Mobile, AbbVie this morning, maybe get into Gilead a little bit. We are going to preview the all-important earnings coming up next week. And a heads up, at 10 a.m. this morning, we do have University of Michigan Consumer Sentiment. Our guest today at 8:35 a.m. Eastern Time is Tony Pawlak of Real Life Trading. Always good to get Tony's positivity and optimism here on the markets and on life just in general. Folks, let's get it going on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
How's your day going, sir?
Good morning. Happy Friday, everybody. Happy NFL day after the draft. We're going to talk about the Giants, a couple big draft picks. I'm excited about that. But let's get to
I like it.
I jumped in for the sports talk. Early sports talk. I jumped the gun.
Woo!
Did you get the player you wanted?
Yes, I was happy at number 3. That's where we picked. We did the logical picks. We picked a great edge rusher. Fine. Defense. I'm all about the defense. And then we traded up at the end of the first round to get Jackson Dart. He's a quarterback out of Ole Miss. He's going to need to develop a little bit, but that's fine. We got some veteran quarterbacks in there too. So, in my opinion, let this guy sit for a year, let him learn. That's what I would love to see, and we'll see if we've got a new franchise quarterback. I'm excited. Let's give it a shot.
Heck yeah.
Awesome.
Heck yeah. Good to hear.
All right.
Let's. Brentster went to the Pistons game.
Yeah. Go ahead, and then I'll do the markets.
They lost by 2. They only lost by 2, but I don't know. They kind of were losing. They were kind of only winning for like 3 or 4 minutes of the whole game. I mean, Little Caesars Arena LCA was popping, though. City was excited for a playoff game. Hasn't been a playoff game for the Pistons in quite some time in Detroit. Still searching for our first playoff win since like 2008 at home. So hopefully on Saturday at 1 p.m. Pistons.
Holy cow.
Yeah. Well, so the last time they were in the playoffs was like 2017 or 2018 season, but they got swept by the Bucks, so they didn't win back then. Yeah,
so
it's going.
So you're telling me if they win at home, it'll be the first win since the financial crisis. Look out, markets! Holy cow! We don't want to see them win at home.
There's a catalyst for you. There's a catalyst.
Do not make indicators
That's
from
a
this
catalyst right there.
It's the Detroit Pistons win at home playoff indicator. It tells all.
Awesome.
Look out. All right.
Okay.
So I'll get to the markets really quickly. International markets. Hang Seng was up 1/3%. Nikkei was up 1.9%. Shanghai was flat last night. European stocks, they're mostly in the green. European stocks, Euro Stocks 50 up 0.4 percentage point. Let's get over to what commodities are doing. Crude down 1% this morning. Nat gas this morning is down just slightly this morning, actually down 1.9% this morning. Let's get to copper. We'll go to next. Copper is down 2% this morning, so has been rising quite nicely, but there's a bit of a move off the highs there. I got the wrong thing up here. Gold's futures. Let's get to gold futures, which are down another 1.7%. Kind of seems like in consolidation phase here after a big run up and after a huge volume on that big run up as well. Silver this morning. Let's get to silver. Down 0.9 of a percentage point. Bonds this morning are staging a nice little rally for the day, up 0.5%. That's very close to the highs of the week in bonds. They stalled out right around this level a couple days ago. Let's get to Bitcoin, which is making a nice little move here just recently. Now up, this is not live on my screens, but up 1.1% this morning. So nice little follow through for Bitcoin this morning. S&P futures now down on the session. They were up most of the overnight session, but giving back some gains, now down about 0.4 of a percentage or 0.3 of a percentage point. NASDAQ futures also it dipped into the red here this morning, down 0.4 of a percentage point. And then finally, Russell small cap futures are down a little bit more than that, down 0.8 of a percentage point, lagging a bit. Good morning, guys.
Good morning. And
Thank you, Christian.
Obviously had a significant overnight rally with Google, and Meta taking off here, and we're going to get to those stocks in a second. The rally really fizzled out this morning with this Time magazine interview of Donald Trump. And I think what spooked the market the most was this comment from that magazine, which came out this morning, that article. Trump said it would be a total victory if tariffs remain at 20 to 50% a year from now. The market does not want to hear anything about tariffs at 20 to 50%. The market wants to hear it down at 10%. Think about the rally that we had. Like the market has told us what it wants to hear. The rally we had, remember, on the Independence Day when he came out and it was rumored, I believe Wall Street Journal broke it, that it was going to be 10% across the board. And SPY ripped from 560 to like 572 on that rumor. And then he came out, and then the big board came out, and showed China at like 50% and Vietnam at like 50%, and then the market tanked. So that's really is what's spooking the market here this morning, is like, man, he's talking about 20 to 50% tariffs again. So that's higher than the market wants. It's probably higher than the economy can really sustain. So that is why, don't look farther. That is why we've given back the Google rally. That is why we've given back the Meta rally. Do we shrug it off? Like I was saying yesterday in the STN room, I made a bold claim and I said, I think the lows for the year are in. I think that dips probably get bought because I believe that Trump has caved to a certain extent, backing down on his tariff talk. That magazine is telling me maybe not. Maybe he's not caved fully because he's talking 20 to 50% here again. So this is a lot of flip-flopping by the administration. We know he's kicked the can down the road the 90 days. But I mean, if he's thinking about putting a long-term 20 to 50% tariffs across the board, the market will be a lot lower than it is now. So it all depends on Trump tariff news coming from the White House. We're still addicted to headlines here. Christian, I want to get your thoughts, just, one on the overnight action, and then I guess we can move into Google and Meta. Christian, you were
Hello, I'm on
Christian,
mute.
you're muted.
That's okay.
Hello.
We're missing Joel.
Got it.
So we have to tribute Joel every once in a while here. And Joel does that 5 times a show. So that's to you, Joel. Christian,
Okay.
What are your thoughts?
So I think that we've come a long way in the last 3 days. So I think that rallying on a Friday is going to be tough, to kind of continue at the pace that we were going. I think that there's at this point, the market has, and if you look from a technical standpoint too, we're into some resistance. So I think that makes sense that we pause here a little bit. Sometimes I think the market looks for something too, to say like, okay, we've been up a little bit. Let's find a little bit of negative news, so that we can basically pause and take a breath here. And I see us getting right back to that April 9th high and just kind of hanging out here a little bit and chilling. So whether or not, I think the big question that I have in my head is whether we're going to retrace like we did last time, or if we could just kind of sit here for a little bit, digest some of those recent gains. I mean, again, it's been a heck of a move this week from the lows where we were, which is a lot. I mean, SPY was down at basically 510, and we're at 544 now. I mean, that's a very large move. I think let us digest a little bit, back and fill. And I think to your point, we're gonna have a lot of earnings reports next week too. So I think that's gonna be the outside of like some other big tariff announcement, or some other rhetoric that says, we're gonna throw tariffs on this country or something like that. I think it's going to come down to earnings a little bit and whether the likes of Amazon are going to deliver. I thought Google. Could we talk about? Could we go to Google
Yeah,
next?
for sure.
Okay, let's go to Google next. I thought that they had gone down so much that I thought that they could rally. I thought it was interesting what Gene Munster said yesterday. He was saying that the results were okay. They're better than expected. You always got to go with the expectations. Better than
Sure.
expected, but not like superstar earnings. From what I read, what do you guys? What was
Yeah,
your
good
guys' opinion?
enough. I think we both kind of, we're in the same camp here that we had low bars for Google and Intel. Intel always finds a way to get under the low bar, so you never want to bet on them. But Google, I think you summed it up well yesterday, Christian, just saying, look, there's a low bar going in. If they say anything okay, the stock's probably going to go higher. The beat was pretty good, actually. $2.81 versus $2.01, 90.23 billion versus 89.2 billion. So it's a nice beat on the top. It's a nice beat on the bottom. It's nice growth for sales year over year. I believe they were talking, it's like 8% growth on sales year over year, which is pretty good for a company the size of Google. Also announcing a $70 billion buyback. So adding to the existing buyback, $70 billion. That gets people excited as well. So that's why Google blasted off on the report. It has fizzled out a little bit here, probably due to that Time Magazine article. We're coming off the highs just a bit, but I mean, holding up fairly well in a down tape. So I would say so far so good for me for Google.
The buyback, a little color on the buyback. So Google announced the same buyback in April of last year, a $70 billion buyback. Through 2024, they had purchased about $62 or $63 billion. So they had about $8 billion for buyback purposes going into this year. I imagine over the first 4 months of this year, they did use a little bit of that cash. So now they're re-upping their buyback. So I don't know. I kind of disagree a little bit, Dennis, that the buyback is something that investors got excited about. It kind of seemed like more of the same. Not that $70 billion isn't a buttload of money to be, buying your stock, but I mean, I don't know, a little bit of more of the same.
So Christian, break down the technicals for us here on Google, because we've got the big pop. It's significantly off its lows from 3 days. 4 days goes $148. Talking about $168. So it's a big move, really, in 4 days here. When you just can talk about where the stocks come from overall. What are your thoughts here? Any trades here at Google?
I think I want to be selling the rip a little bit. I did put on a very cheap earnings play, but I think I went a little bit too far away. I put on the 165, 170 call spread. I think I should have went in a little bit closer. I put that trade on for pretty cheap. Put that on for $1.25. So I think it's going to be interesting whether this holds the gains. I'm worried that this leaks the gains out because I think there's still so much overhang with the stock. So again, results good, that's great, but I think for the future, I'm still concerned. Like, what are the catalysts going to be for? Like, why do I
Yeah,
buy it other than a $70 billion buyback? And I think that shows
right.
confidence, and they are increasing their dividend a little bit. But yeah, I would be concerned about that. I would watch from a technical standpoint, the 50-day moving average 164, 165 ish, and then your next resistance up there is 170. So that's where I was kind of looking to see if it could maybe do a little bit larger of a move, but that's
Mhm.
going to be tough for today. So I'm in the camp that I don't think it fades and it gives back all the gains, but I don't think it blasts off and goes higher than the pre-market highs, which is I see. That resistance is right around 170, but I would be very surprised if it went above 170 today, or 169, 170. Sorry.
let's stick with this Google call just for a second here, because on the call, positive commentary here, and Meta is what we saw actually really lifting on the Google call as well. I believe actually the funny thing is Meta, so we got Google trading up 3.67%. Meta was up at one time almost as much as Google. It's up 2.68% now. So getting a lift. We also saw the trade desk lifting on this last night. Again, some of these gains have faded because the overall market has come down a little bit, but we saw Pinterest popping up. We saw Snapchat popping up last night.
Amazon too, I think, right?
Amazon is still trading in the green slightly. Again, this Time articles brought down stocks from where they were, but Amazon at one point in time, I think it was up $3 last night. So we're off those highs. Let's go to Meta. Let's do the technicals just on Meta here as well, because I think it was up at 555 last night. It's 546 here now. Are you seeing any type of life? I still see an overall downtrend in Meta and a stock that's bumping up against that downtrend. Is there hope here for Meta? Are we trying to break out? Christian, what do you see in the technicals?
So we've got earnings for them next week. That's on Wednesday. I'm watching 542. 542.60 is the level that I'm watching. That's the first level to watch. And then we've got the overhead 200-day moving average up at 578. I think that my thought is if they have a good quarter, I would look for them to rally up into that level. Interesting that they're way off the highs from again, I keep going back to that April 9th day. So let me zoom in here for you guys so that you can see that. But here's the April 9th day, and that's exactly where where it got stuffed last time, was the 200-day moving average, bottom of the April value area. So I think that my thought is that it could rally, but that would be the big test for it, is if it gets back up to those April 9th highs. Very interesting that it's not even close. So a little bit of an underperformer, I would say, versus the overall market, considering SPY, just to give you that picture, right? SPY is right back to that April 9th high. And I think that's really the key for the overall market going forward, is whether you could take out those April 9th highs. But yeah, so Meta's sitting here, like maybe it sits here and maybe that's the trade, is that you look for it to bounce up to those April 9th highs right around 579.
Also, on the earnings front from last night, we did get Intel. Intel beating on the quarter. Their guidance was a little light. They said they were expecting Q2 earnings. Q2 loss of 32 cents. Analysts were at about a 16-cent loss. And then sales, they're expecting 11.2 billion to 12.4 billion. Analysts are all the way up at 12.84 billion. Intel shares this morning trading down about 7%. Dennis, what did you think of the report here? What did you think of the price action?
Expected move range. We ranged it out last night in the STN room, 1970 to 2310. Obviously, it's a disappointment. So the 1970 is the level we think about. It has bounced at that level there overnight. So the 1970 inside that expected range is trying to hold. There's underneath demand here just because I think we've got a buy the dip mentality in this market. A lot of money managers.
Sure.
Some have been bearish, some have been nervous, some have had a lot of cash. Those money managers probably looking for dips to put stocks to work. Intel, I've been in Intel for a while. I'm telling you, money managers, this has not been the place to be. I will give you the support, though. 18 to 19, there's been lots of technical support there. Everybody's been banking on the Intel turnaround story for a very long time, and maybe one day it comes. But when I see earnings where they're going to lose more money than even expected, it's hard to sit around here forever. So, I mean, you can. I know Joel and I have had that small position in there for a while. I think actually Joel sold his too. We've got support here. That's what I'll say. But the stock is just an absolute mess. The company is an absolute mess.
Agreed. There's some
Christian,
resistance.
Yeah,
resistance that, right around 2130. That is the high from a couple weeks back. Stock remains in a downtrend. It does have these bounces. We've seen these bounces time and time again over the last 6 months. We know that there's also, let me go to the weekly chart so that you could see that there is, I believe, there's some support back here, especially around this 1850 level. It's really been kind of bouncing off that level, but the bounces are short-lived. And, I think that this is the ultimate triple D type trade where, you know, it bounces and you just kind of sell the rip, right? I mean, Dennis, that seems to be the story over and over with Intel over the last 6 months or so.
It is. I mean, we've just been in this market where stocks that are in eternal downtrends get these, you know, times where they rally up substantially and they're just more selling opportunities. I mean, look back to February and Intel stock goes from 20 to 27 and gives it all back. Then again, it gives you another shot in March, goes from 20 to 26, gives it all back. I mean, it's just been the trade of Intel as to sell the rip. And this, again, applies to most stocks. I think overall, sometimes back out, look what the stock's been doing for the last couple of years. And when you have these stocks with eternal downtrends here, they rally back up to, you know, the trend line or even maybe just a little bit farther. There's just so much overhead supply. This is why turnaround stories are so hard, because there's bag holders everywhere in the stock. Please give me to 25. I'll never trade a stock again. I just got to get my money back. I mean, that is the mentality in all these stocks. That's why it's, you know, that's why Christian's strategies work so well, because he's always looking for strength. You don't have that overhead supply issue when you're always buying stocks that are trending higher. When you're buying stocks that are trending lower in your long-term portfolio, the odd time you will catch a turnaround story, but a lot of times you just get left in the dust.
This is a great trader's name too, because you know these are decent moves, percentage moves. Even though it's been trading and it's in a downtrend, but it's been trading in this range back and forth, and you can make money off this stock because, you know, a move from $20 to 26, you know, and then you fade the 26, and then, you know, so it's not just like a $2 move. It's, you're looking at $5-6 on a $20 stock. So I mean, it's a good trader stock.
Guess what? More earnings here. Let's kick it over to T-Mobile. The earnings parade continuing. T-Mobile beating on the quarter. They did raise their adjusted EBITDA guidance, their net cash from operating activities. They maintained their customer addition guidance. In the press release, they called it the best Q1 ever, according to T-Mobile. Shares trading down 5% here. What say you, Dennis, on T-Mobile?
Isn't this funny? Where you get a company that beats, calls their quarter the best quarter ever, and the stock falls 5%. People are like, what the hell? It's all about the bar. The bar, the bar, the bar. Stock is very close to 52-week highs and all-time highs, in a market that's off, you know, 20, 30% on some stocks. And the bar just simply too high here. Also, if you want to talk a little ETF effects for a minute, we talked about this in the S10 room as well. We're really chopping around it. We had something happened. Anyways, S&P futures just dropped there really quickly and it's bouncing back. So somebody said something, but I got sidetracked. ETF effects in here as well. T-Mobile, part of the Qs. As soon as Google was rallying, I was like, I should just sell T-Mobile. Should just sell, because we were in the STN room and T-Mobile was trading flat and they had the good numbers come out. You covered it, Brent. And then I said, when it was 262, I was like, this stock will have a hard time going up simply because Google is flying right now and they'll want to sell something. And just like on cue, T-Mobile started tanking. So the bar working against it, ETF effects working against it, company still firing on all cylinders, but doesn't matter when your bar is high and Google's, you know, trading up $8 at that time. They were looking to sell something, and T-Mobile, unfortunately, was the victim.
Yeah, well, this is a great point. By the way, there's a headline out with China, U.S. not having any talks on tariffs. That's what the China embassy. So around and round we go. T-Mobile, this is also like a pattern that we've now been seeing, is that any names that seem to be that at very close to all-time highs are having a very difficult time on earnings. The market just doesn't want to reward the names that are close to 52-week highs. We've seen several of them get hit. Some of them should have gotten hit. You know, we've seen United Healthcare go down. We saw IBM go down. What else? There was I can't think of the other name this week too that really the defense names too. NOC fell. You know, all of those.
UNH was up there, Christian, near highs, and it fell right out of bed. It's like I'm with you, man. Like, it seems like the stocks that are trading up near 52-week highs or even 2025 highs, they report. A lot of them are getting hit on good earnings.
Yeah, It's been a danger to be close to all-time highs and report earnings. So, I think you can kind of use that information a little bit in terms of risk reward about whether or
Yeah.
not you want to be playing these names to the long side that are hanging around that have outperformed a bit. So,
I mean,
yeah.
Jay in the chat saying Procter Gamble too. So I think is there a trade here? Like, should we just be executing and putting, basically banking on these stocks going down, putting on shorts or buying puts or doing put spreads on these stocks that are trading up near 52-week highs because they seem to have to blow it away? And should we be doing the opposite? Like, is there a trade to be like short stocks that are sitting up near their highs into earnings and long stocks that are sitting down near their lows into earnings, with the exception of Intel always?
Yeah, that's worked. I mean, that's been the pattern that's working. So, going into next week, I would be very mindful of like, because you're going to have both. You're going to have the Meta and the Amazon reporting. Those names I think could go higher. But other names that are kind of sitting there, I like that strategy. I think that's a good strategy to play until we start to see more breakouts. I mean, even let's just go back to Netflix for a second. Like Netflix,
Sure.
had a great quarter, and they were kind of in the middle when they reported. They weren't at the previous highs. They were a little bit off, but even the day after Netflix reported, which again was weird because that was before the holiday, but that was Monday, and it kind of just
Mm-hmm.
sputtered a little bit on Monday,
It
and it
did.
had to basically fight through that. And it ultimately did fight through that and get to new highs, which I think is a good thing for the overall market, but it wasn't your immediately blast off. So even something that had, which I thought, you guys correct me wrong, but I thought Netflix had really stellar numbers. I
Awesome.
didn't think that there's,
Yeah.
I mean, so it was, hey, what is the stock going to do? And it needed to fight through that on the first day after earnings, where it sputtered a little bit. So
A
yeah,
stock
so
here
next
this
week.
morning.
So let me
Go ahead,
just finish one
Christian.
thing. So
Yeah,
if a
yeah.
name is sitting like close to those all-time highs, and if it doesn't have stellar earnings, it could sputter. I mean, it could be something to kind of consider maybe selling some upside premium. So go ahead. Sorry, Brent.
Oh, you're all good. Just wanted to note that S&P 500 futures kind of chopping around here following that China denying that they're having tariff talks. Pulled back, not too much though. I don't know, 6 or 7 points here from where we were trading.
We're kind of, I want to stop there for a second with this
Yeah,
headline because you can start seeing
yeah.
trading action kind of becoming a little bit numb to some of this stuff.
Already,
Like,
Dennis.
it's not as violent, the moves here. And to Christian's point, there's been some de-escalation, obviously from Trump, on the tariff front. But the market itself is starting to become numb to these headlines to a certain extent as well. Yeah, we sold off. But I mean, if you would have said this 3 weeks ago, Trump's talking about 50% tariffs again. I mean, the market would have just tanked and been destroyed on it. And, Donald made a good point in the chat. That Time magazine article probably was interviewed a few days ago. So maybe his tune has still changed. Maybe the market is, grasping onto that. But I mean, Trump said yesterday, oh yeah, he spoke to Xi. Yeah, we're talking, and then they asked, the reporter said, yeah, we had meetings. They had meetings. He said they had meetings yesterday between China and the U.S. And then the reporter said, well, who's they? And he said, that's not important. I mean, I don't know what, if it's his talk coming out of Trump here, just sputtering. I don't know, what the truth is. The truth probably lies somewhere in the middle. But I mean, we're at a point here where the markets is starting to become numb to a certain extent to some of these headlines. Like the reactions are still there. So it's not, numb may not be the same word, but it's less reaction. Like, we're not getting violent 75-point sell-offs here now. We're not getting, we did get the rally obviously the last couple of days. So I think that's a good thing, isn't it, Christian? That, we're starting to like not have so much violence in the markets off these headlines.
Yeah, it's a great point. I think it's a lot of talk, but it's not a lot of new actions. We're not seeing anything. We're not seeing, okay, well, they said that they said that we didn't talk. I'm going to raise tariffs by another 25%. You're not getting that. You're getting a toned down type situation. So I think it's very important to kind of separate that. You're going to get headlines. You're still going to get Trump talking all day long. They're going to get
He likes
him
talking.
when Yeah, I mean, he's going to continue to talk about this. But what you want to pay attention to is the rhetoric, is it increasing? Is it getting, or is it actually being diffused? And even though they're kind of going back and forth about this is kind of dumb, like whether or not they're actually talking or
I
talking
know.
about talking, that's not going to really, that shouldn't affect the market too much, because there isn't any bottom line to it. There isn't, and they both said that they want to have nice happy talks, and where
Nice
they
and
get stuff
happy.
done, yeah. So I mean, it's kind of, unless they actually really start to reach another like fever pitch of
Yeah.
bringing up saying, hey, we're not going to actually talk and we're going to retaliate and all that, then you have to worry about things a little bit. But if they're just going to talk about whether they're talking, I don't think it's less to worry about right this second.
I want to just highlight the other side of this too, because Dennis, I asked you a few days ago, like, what do you make of the market becoming numb and jaded to this stuff? Like, why does it matter? Why should we be focused on it? And one thing that you said, correct me if I'm wrong, you said, well, it's gonna also, when we have good news, then the impact is gonna be a lot less on the upside too, right?
Oh, I think so. I think, we're going to get like the first deal. When we get the official announcement of the first deal, the market's going to have a pretty good rally. It's going to be a big deal for the market. And then it's going to be the second deal, third deal. And by the fifth deal, there ain't going to be any reaction at all. I think we're just starting to see like the talk is talk right now. And to Christian's point, we're talking about talking. I mean, the market is just, it's getting an initial headline, like an initial algo reaction to it, but then it's just like, yeah, don't really care as much here. I mean, that's all good for the markets. I mean, this is why in the STN room yesterday, I went on bold call and said, I think the lows for the year are in. I don't think we do get a retest of the bottoms. Now, again, I said, barring, he starts talking 50% tariffs and we actually start implementing 50% tariffs again, then that all changes. But the whole thing, like, let's just stop and just take this whole thing in perspective. The markets sold off, one, to Christian's point before, we were overvalued. We were calling for a weaker year. Joel started his acronym as PUNT, for crying out loud, which is a fantastic call. I said, I think we start the year maybe where we ended up. Nobody was banking on like a 25, 30% up year here. There wasn't a lot of people calling for that. So we had two really good years. So we were probably just in an overbought situation to a certain extent and needed a correction. The catalyst for the correction was the tariffs. The tariffs came down. We got into market correction territory. The S&P officially kissed 20% down. I think NASDAQ was down even more than that. So I think we've had that correction. And as long as China doesn't go invade Taiwan, as long as it doesn't start to re-escalate in some crazy ways, I think there's a good case to be made that April might see the 2025 lows, and we may have already seen the 2025 lows. So I was saying I'd be a buyer of dips on stocks. Now, again, you've got to cherry pick and pick the right stocks. That's always the case. But I just think, it's similar setup to like what COVID was. And I don't think we're going to have this blasting off rally, afterwards. But I mean, the COVID V-bottomed. People forget. They think of 2020 as such a fantastic year, that it was just a year of stocks. But it wouldn't start that way. March, we were down 30% in a month. Like, it was violent. And then it was literally 3 months later, we'd gotten all the losses back because the COVID problems had gone away. I mean, if tariffs can come down to that 10% level across the board, the market can totally handle that. Totally. It can't handle 30, 50, 140% tariffs. It can't handle that. So as long as Trump is bringing those numbers down and getting down into like that 10% area, and the deals that come on the table have like, those lower numbers, I think there's a case to be made that the low for the stocks are in. So again, I could be wrong. I don't have a crystal ball. I wish I could be like Back to the Future and go into the future and see what actually happened. But right now, just with the information we have, and you can see even the tape, the market is like buying dips right now. So I've got to buy the dip hat back on.
Well, I'm going to
just
say,
like a little.
I'm going to
Go
say
ahead,
real
Christian.
quick that I think that there's a 75% chance that we go higher a year from now.
Ha! This is so fantastic.
What a segue,
okay, this is
Christian.
Look how perfect Christian
Bravo.
brought this back. Because Christian posted this. There's this. You got to tell us about this. What is it? Zwag breath thrust here, Christian. Talk to me about the Zwag breath thrust, which I've never heard of before.
Yeah, so the market likes these things. They like to have some type of trying to put some certainty around an uncertain situation. So there is something that's called the Zwag breath thrust, or ZBT to be fancy. And basically, I'm not going to go through the calculation with this, but it basically just is looking at advancing issues, overall issues, and what the ratio does. And when the ratio flips, when it's like below 40, and then it jumps to a 60, at least 61.5 in terms of overall breath in a 10-day period, it generates something called a Zwag breath thrust. So what is the so what of this? Well, every time that this has happened since 1960, the market has in the next year has gone up 100% of the time. So it's not that frequent that it happens, but when it does generate this particular signal, it says that there's 100% chance from a year from now that the price is going to be higher. And I'm going to give you my quick, my quick thoughts on this is that, yes, so people do like to get some type of certain stat, that's out there. But I always go back to, whenever you're looking at any type of market stats that are trying to basically convince you of some narrative, what do we know on average? And what you're showing there is Helene Meisler's that's her article, and I think it's thestreet.com that she publishes that in. But she's basically saying, hey, let's put things in perspective. And she's being a little bit of a contrarian and saying, by the way, if you look at average stats, it's something like around 75% of the time, any time that you look at where we are in the market, that a year from now, the market is going to be higher. So yes, this puts a little bit more certainty into it, but it's always good to have that in the back of your mind, in my opinion, that the market goes up over time. And I know everybody tries to do something different in the short time, and that's important too. But overall, the market goes up over time. So and that's something that you should know. And we talk about different time frames too, about like knowing your time frame. If you're a long-term investor, it's Dennis, it's a good time to be buying if you've got a long time horizon. Agree, disagree?
Yeah. Christian, it's such a fantastic point, because we can look at all these indicators, but if you have a long enough time horizon, if your time horizon is 15 years, you've never had a period where the market's been down for 15 years. I think 12. I think we had 68 to 80. So, and then, obviously Great Depression, we were a long time too. But overall, it's such a great stat that Colleen is bringing to us here. 75, if you take any point in time, 75% of the time a year later, the market's higher. So that just tells you overall, if you're bullish, if you go on media like Tom Lee and you just talk bullishness all the time, forever and ever and ever, you're probably going to be right most of the time, because just by the market just going up and companies growing over time, the market goes higher 75% of the time. So we can find all these indicators. We can say this and that. Oh, the market's probably going to bounce back. It's just always a good bet to bet on the markets. I mean, this is why, and people say, my long-term portfolio, they're like, well, why don't you short stocks in your long-term portfolio? Why don't you hedge in your long-term portfolio? You know why? Because what Helene's saying, 75% of the time, a year later, it's going to be higher. So my job as a trader in my trading account is to be a market timer. My job as an investor is to stay invested in good companies at reasonable valuations. That's my job as an investor, because I'm extracting that 75% of the time the market is going to be higher in that long-term portfolio. Imagine if I started investing in 1997. Imagine I was like, well, I'm going to hedge. I don't think the market's going to go higher. It's a big tech bubble burst. I would look like a hero in 2001, but I would have missed all the gains from 97 to 2001. And then, I would have looked like pretty good from 2007 to 2010, because there was a long period where stocks didn't go up there either. But I would have missed all the gains from 2010 to 2025. So I just think, if you have a long enough time horizon, why bet against? Why bet on the world ending? Why bet on, everything, falling apart here? So I think time perspective is so important here. And I think, this brings up that good point. Just stay invested in the long term. If you're a long time horizon, this is all noise. If you're short time horizon, this is a living trading.
I know somebody that is going to be able to comment on this, and let's bring him in right now.
What's up,
Tony
guys?
Pawlak, Good morning, sir. One of the experts over at Real Life Trading. How is your morning going?
It's going great. Yeah, it's going awesome. I slept in a little bit this morning, which was nice. I've been cooking
Way to
all week
be.
long.
Good for
So
you.
yeah,
Heck
it's like
yeah, heck
if we
yeah.
can't sleep in a little bit, then why not, right? So
Were you
there we
just
go.
were you just listening to a little bit of the convo about the
I was.
Zwag indicator, Tony? What you got any thoughts to toss at us here?
Yeah, I love your conversation about just staying bullish, because really, I mean, that's where it's going to be at. I like to do what the hedge funds do. If I'm nervous, I buy insurance. I don't have to worry about it. I'm covered dollar for dollar on the whole way down, buy puts. If I'm wrong and the market's rampage, cool, I'll give up a couple percentage, but I can catch the other 20% on the upside, and I'm covered for the whole way down. So I just never sell. Long-term percentage, I mean, long-term portfolio, if I could talk, stay in it. If you're nervous, you buy some insurance, just like car insurance every single month. I'll lose money on car insurance every month. I don't buy that every month, by the way. I buy it like once every couple years. Whenever a structure on a weekly breaks down is when I start buying my insurance. So most dips I'm not buying insurance on long-term portfolios. But when things start to break like this past little bit, I buy insurance. If it rampages bullish, I'm still in everything. I don't have to time the markets, but I can be protected on the way down. So that's what I do. Keep it simple. Don't try to be a hero. Just if I'm wrong, I'll lose a little bit, but I'm still in my position to ride up as high as this thing wants to go. And if I'm right, I got protection the whole way down. I just cash it out, use that money to buy more shares on the dip and take it back up again. So simple. Keep it easy.
So Tony, that's the easy part, the long-term portfolio, like just staying long in the long-term portfolio.
Yeah.
The problem is me and you are traders too. So we have to make a living off trading. Like I don't have a day job here. So I actually have to time the market, short stocks in the short-term portfolio, look and read all these headlines and get whipsawed. So one, Tony, I want to know how you navigate, like let's get Tony Pawlak's perspective here on navigating this headline-driven market where it seems like, we have whipsaw actions in both directions. How are you navigating this market?
Yeah, for me, I'm trying to just stay objective. News for me it's going to make things feel random. And when things feel random, I feel like I'm not in control. Emotions are high. I start reacting and trying to predict, and I start getting nervous. And I've never made money when I have that type of approach. Over the years, I've always lost money in trading whenever I'm in that mindset. And so for me, I go to try to find logic. I realize that the markets are going to work their way to levels. I kind of believe that the markets move and people kind of react to it. Now, we do have random news that's going to move these markets, but even then, it's just going to move it to the level that I've been waiting for. So if we go bullish, I'm looking at this level. If we go bearish, I'm looking at this level. And I know the market's going to magnetize one way or another. So then I just start getting really short-term day trade type stuff. So I'm not doing as many swing trades right now in this news kind of market until it starts to break some of the bigger weekly levels and I can see the strong long-term momentum play out. Then I'll start doing a lot more swing trade stuff. Other than that, like I'm selling a whole lot of 0 DT options right now, making lots of money on that. I'm buying a lot of options day trading wise, 0 DT again, just kind of getting in and out because I can see momentum pretty easily on a day trade. For the next 2 hours, this looks really bullish, this looks really bearish, and I'm just playing my levels. And so that kind of keeps me out of the markets for random stuff that's happening overnight. Yes, I got burned one time on a couple on some news that came out earlier. That's going to happen, and that's okay because I set myself up with leverage on options, so I control my downside. I didn't get beat up. I lost like 0.4 Rs on that, which means if I'm risking $100, I lost $40 out of that 100. Like really small loss. So just stay short with it. That's what I've been doing, is just riding that short-term momentum until the levels break on the bigger time frames. Then I'll be able to go, okay, now we're really bullish, and I'm going to start looking at holding this for quite a while for trading, or we're really bearish, and I'll start looking at for this, holding this thing down. So that's the way I look at it. Be a little bit more objective. Don't try to predict the news, and just let the market show you what they're going to do. The last little tip is I don't trade in the first 30 minutes of the day right now. I let the market show me their hand. I let the market show me the momentum for the day. And then I just look for my entry from there and ride that momentum the best I can.
Hey Tony, that's a great point. I've been noticing that too. Like once you get to I've been waiting for 15 minutes. I try to get to 9:45, and we saw that yesterday too. Where, oh my God, like the queues were just blasting off, and I started to get alerts on various different names that were really kind of taking off in the tech group, and I was like, geez, this looks like a rocket ship. And yeah, and you can wait, you can give it a little bit of time for the market to kind of get out of the gate. Are you you talked about 0-day options. Are you basically right now trying to keep it simple and trade the indices, or are you also veering off a little bit? Like, what's your strategy with some of the single names? And like I mentioned yesterday, it was more tech. So were you kind of slanted that way, or were you just looking at the cues?
I'm mainly just looking at the cues. Like I'll play SPY and cues a lot. Just because I love the options. It gives me expirations every day. I'm playing that game. So I try to keep it as simple as possible. It's something that I follow every day. Now I trade other stocks, but if ever I need my go-to fallback, it's like SPY. Like I'll just go right back to SPY. I know how it moves. I'm very familiar with it, and that's my comfort zone. If I feel like if there's some question marks out there, there's been a lot of question marks out there of like, where are we going? I go right back to SPY, keep it simple, wait for my setups and make money while I'm waiting for the direction to figure itself out.
When you're setting up these trades, I'm just trying to get a feel for your trading here too, Tony, because it's always interesting to have active traders on. Are you like just using pure technicals and just looking like, okay, like we're, to talk about like your intraday trading strategies? Like I've always struggled to trade intraday. That's why I've moved most of my trading to overnight, because I feel like it's so choppy and unpredictable intraday, where moves are actually, believe it or not, smoother overnight. What are your thoughts? Just like, how do you trade intraday? Talk to us about, setting up a SPY trade intraday.
Yeah. So there's a few things I'm going to do. I'm going to start my day pre-market. If I'm not setting up my game plan pre-market, I'm usually not trading for the day. So it's very rare where something's going to come up where I'm like, I'm going to trade this that I didn't plan on trading pre-market. So I'm talking levels. So I'll pick out certain levels that I'm like, man, this is really good, or this is really good up here. And so I'm always doing a bull and a bear level. Because I don't know which way the market's going to go for the day. I might be leaning a lot bullish and this goes bearish. And so I just prep myself with levels. All right, this is a spot I want to pay attention to. This is the spot I want to pay attention to. And so that's all done pre-market before any of the emotions come in, before any of the biases come in for the day. I'm picking out my spots. Once I've got my spots picked out, now I'm going to start leaning back onto where's my momentum at. So again, I'm doing this on a daily time frame. I'm not on a 5-minute time frame. I'm not zoomed in. I'm looking at the big picture. Where most likely are we going to be going if the bulls are here? Where are we most likely to be going if the bears are here? And I start picking my targets for the day. All right, if the bulls do step in, if it goes to this area and I get in, where am I going to get out? And this is all done on a daily time frame, using support resistances, using just certain sentiment levels that I've traded myself on, and just like, I don't know what it is. It's just I can pick out certain levels through just experience, I guess, of where I know the bulls got trapped previously and they're going to try to work it back to, or just big time sentiment levels of control. And that's really what I'm looking at, is just who's gaining control, who's lost control. And it loves to revisit some of those areas. And so I'm just picking out some of those spots. Once I have my targets and I have my sentiment plays, I have an area of where I want to start looking at my entries. Then I let the markets open and I just sit back and I have alerts on my charts. So I'm not living my life. I'm still home, but once my alerts go off, I'm at my computer now, and now I'm starting to go, okay, where's my setup at? I have tons of different setups for different market environments, lots of different strategies. I have some strategies where it's like, I think a quick move's coming and I'm going to use this. I have some strategies where I'm like, this might take all day. I'm going to plan it, kind of approach the markets differently with options. And so depending on what that situation is, it's different almost on a daily basis. Then I'm going to start playing that. And so it's all about momentum. And my setups are specific where I know I'm right or wrong within 5 minutes. So that way I can cut. I don't need to get out, after an hour of like, man, is this thing going to turn around? It's like, this is the bouncing spot. If the bulls don't come in like I want to see it, I cut. And so I set myself up to lose really small, and I set myself up to win really big. And by the way, I lose all the time. I have a 50-ish% win rate day trading. But the thing is, when I'm wrong, I'm losing pennies on the dollar. And when I'm right, I'm making dollars. And that's the difference. It doesn't, I don't need to be correct. I just need to lose small when the markets don't agree with my levels that I picked out. And when they do agree, let them run and win big. And so that's my approach on day trading.
In this environment, just one more question with that strategy, because it's like tough, man, because it's so choppy and, you know, so much intraday volatility and whipsaw action. So, you know, when you're like always trying to like have tighter stops, I feel like I'm getting stopped out on everything at that point in time. How do you not get, you know, stopped out in this whipsaw headline driven market?
Yeah. I use options are a great way because I don't have to actually have a physical stop in the way I set it up. So whatever you spend on the option is what you can lose. So let's just say $100. If you are okay to lose $100 and you buy $100 worth of options, you don't need to stop, because the markets just go hard
It's
against
in
you,
itself. Yeah.
exactly, you're just losing $100. So I approach my entries that way, and then I add to the position when it works. So I'll leg in with an absolute zero setup, so I don't need to stop, and I can give it time to see what it's going to do. And again, I don't need a ton of time for me to be able to go, that's working or it's not. But I've got smallish size on that's still going to make pretty good. You know, I'll still make 100 or 200% return on if it goes and I don't add anything else. But once it's working, then I have a game plan to start adding back into size now that I have a level of like, it's not going to break this. And if it does, I'm out. That's where I can start putting in my stops afterwards after I add more size in. So that's been my approach on the volatility of just kind of getting whipped out, is setting yourself up where you can play the volatility and not stress too much about something, you know, stopping everybody out with hard stops and then going all the way to target. That's been happening a lot lately for everyone. But for me in options, I just stay in because I know my worst case scenario and I'm good with that. So I don't need to stop.
So most of your trades, Tony, then are like short term intraday. Do you do like, I think you've talked about it before, you do some longer term swing trades though as well, don't you?
Oh yeah. I
What's
do.
your meat and potatoes? Is it the swing trading or is it the short term like intraday trading?
It depends on the environment, really. Most of the time, I have a lot of trades that I'm planning on holding for like 2 or 3 days. Like that's where I live. But in this market, I've had a big question mark right now because, in my opinion, we still have bearish sentiment. Bears are in control, but the bulls are moving strong. And so whenever I'm in that situation, that's where I start pulling back and I start going, where can I find my higher probability sentiment? Like where I can see the momentum for the next hour. I don't know the momentum for the next 2 days. And so then I start shifting a lot more short term. So I kind of float. Like I'll have trades where I'm just getting in and out. And I have trades where I sit in it and I don't touch it for days, and I'll just be in it for 5 or 10 days and I won't day trade it at all. And so it really has to do with the market environment. And that market environment is not like it's bullish. It's more of how well am I seeing it? Do I feel like I'm in line with where this thing's trying to go? And if I don't know that, then I kind of shoot on over to the smaller time frames because I can figure out momentum there pretty easily. And I can go, all right, for the next 2 hours, we're moving to this level with a high probability. And if not, I'm good with losing. And if I am, I can make, you know, quite a bit more than what I would risk. And I just play that. So it fluctuates a lot. I'm not kind of stuck on one thing. I prefer to do a lot of credit spreads that expire in like 2 to 3 days. Like that's my happy place. But right now I've just been shifting it to the shorter term time frames and being a little bit more active in my trading for short term.
This is such great information because you have to make adjustments in this market. And I've been trying to do the same thing. I have not been trading the 0-day options, but I've been trading like the TQQQ and the SPXL a little bit. Those are great ways too. Like if you're not an options trader, that's another way to do it. But I just want to reiterate one thing that you said too is, and this is the hard part of this, is that you're getting out when you know that your trade is not working the right way or not doing what you thought is going to do. This is the hardest part of doing these types of trades, is being able to say, I was wrong, I'm going to get out and I'm going to reassess. It's so important to not screw up the last, like if you've had a couple good days of gains, like don't keep pressing without like a stop. So I just want to like, I'm going to come up with a question here in a second, but it's just so important to understand like what the market's giving you. Right now, the market is giving you these big swings from either downside to upside, and that will change. And when it does change, like, cause this will eventually, once you get comfortable, like I feel like once I get comfortable and okay, now I'm going to just kick around TQQ all day long, then the market seems to change. So when it does change, because it will, the intraday volatility will change.
Yeah.
You will go back to, you said like a little bit more of like short-term swing trading. Now, do you do that? Can you talk a little bit about that? Will you be looking at relative strength names? How will you be assessing that?
Yeah, for me, I'm going to start with just looking at volatility. So I pay a lot of attention again to options. And so I have my option volatility. Each expiration has its own volatility. What I want to see is I want to see normal levels kind of coming back into the markets. Then I know it's about that time to go ahead and shift it back over. We're already seeing that right now. SPY went from like 60% vol. Normally it's 15. We're at like 60, and now it's dropping into like 30 and 20s. And so we're already starting to normalize where it's getting to that place where I can go ahead and start shifting my mindset more towards my normal 2 or 3 day out type stuff. Easy momentum plays that I can catch, that I have enough room to be wrong. But yeah, it's whenever I go back to that type of trading again, for me, if I'm doing anything outside of Q and SPY, I do a lot more selling of options because I have a big cushion to be wrong. So it's like, as long as it stays above this level, I win. So it can go up, down, sideways, it can do whatever the heck it wants to do. I win. And on average, I'll make like 1% of my trading account on these trades. So just 90% win rate, consistent, sell it. And then on SPY and Qs is where I'll go ahead and actually be like, all right, I'm going to call my shot. And if I'm wrong, I'm going to lose, 1 to 2% of my account. But if I'm right, I'll make 5 to 10% of my account. And so I'll start playing those games just on SPY and Qs usually. There are the random exceptions, like Tesla last year. We really jumped on that one, but that's because we planned it for like a year. My next little piece of advice, real quick, my friends, is realize that the big moves, the home run hitters, like what I've seen, those are the trades that I've been planning for 6 months to 2 years. Like SPY 2 weeks ago, we were planning on that drop, waiting on it, and we doubled our investment account in like 2 weeks. I didn't put on a whole lot of size. It's not like I put on my entire account on that. I used options, so I could put on a very small amount, but they leverage like crazy. But that type of trade comes along every 3 to 5 years, like that good. I planned that trade for years. I was like, if this level breaks, my friends, this is what we're doing. And then it didn't break for years. And I was like, if this breaks, and then it finally broke and we played it. So those home run winners, like the Tesla last year, we got into that and just rode it like crazy. We planned on that for over a year. We were looking at a descending trend line forever on a monthly chart, Took years for it to break. When it did, we played it. So I like to hit base hits, and I'll just hit base hits all day long for years. And then my home run swings come once a year on average. And those are ones that I've been planning for a long time. So I think it's very easy to look at stuff and be like, wow, he just doubled his trading account. It's like, yeah. And then they try to do that every week and then they blow it up. Like, no, that's something that I've been waiting on for a year. And if I haven't planned it for 6 months, I won't take it, no matter how good the level is with that kind of size or that kind of expectation. So have that mindset there, because I chased home runs when I was first starting out. I hit a home run. I'm like, this is how I'm going to trade now. I didn't realize they only come around once in a blue moon, right? So it's having that right expectation to be like, hit the base hits, be happy with your 1 to 2% of your account returns. And by the way, if you're making 2% of return on your account a week, which is about what I'm averaging here between credit spreads and some day trades, about 2% a week, you are crushing the markets. I mean, slaying the markets if you can do that. 5 to 10%.
Slaying every markets if you can do 2% a week.
Yeah,
that's 100% a year.
That's awesome.
Yeah.
Those are awesome.
Yeah, there's opportunities out there, and be content with that. Don't go out there trying to hit the 30%, 40%, or doubling trading accounts on each trade. And that's harder to, I mean, if you have a $2,000 trading account, it gets very boring. You're like, man, I'm making $10. I'm making $5. I'm making $20.
Right.
But it's like, that's how you grow over time. And that's the same mindset you've got to have when you have a $200,000 trading account or $1 million or whatever. It's just a matter of size now. So be boring. That's the best way to make money. Because as soon as you try to make that $1,000 on a $1,000 trading account every week, you tend to just blow it up. So, yeah.
Tony reminding us that patience is a virtue, ladies and gentlemen. Tony, I always appreciate your level-headedness, your practicality. Really appreciate you coming on here this morning. I hope you have a good weekend, sir.
Thank you guys so much. Appreciate it.
All right, later. Love having Tony on.
Great stuff.
Always great stuff.
Oh yeah. We love real life trading. We've been, obviously friends, Jeremy, for a long time, and Tony's running real life trading over there. Great guy.
Yeah. We're going into the weekend here, boys. I just want to get your guys' final thoughts real quick before we wrap. Christian,
Can we
you
talk
got
the
any final
CEP for a
thoughts?
second before we wrap?
Yeah, let's
Can
do
we
it.
talk
Let's do it.
CEP? Because this stock is just exploding here again. I don't know all the details
Cantor
on this. I know
Equity
it's something with
Partners.
Bitcoin, and it was a SPAC, and now it's Bitcoin, and you get this. I don't. Money Mitch, are you in the chat here? He's gone. He leaves, but we got to get Money Mitch. But maybe we need SPACs attack again, because this is like the second one
SPAC
with
attack.
Webull. Now we got CEP. We might have to start a SPACs attack show over here, the old Benzinga show there, over here on the Pre-Market Prep channel, because wow, this is the second one that's exploding here. CEP. Christian, are you following this story?
I mean, a little bit. It's very meme-ish. It's got that flavor to it, and we have seen these things go a couple days. Like the Webull lasted a couple days, and then it kind of broke apart. So, yeah, you got to be careful with some of these things. But I did see it mentioned in the chat quite a bit, and people are talking about this name. It is, yeah. You haven't really heard the term like SPAC too much, but so I'm following a little bit. Again, it's one of these things where you got to be careful with these things because it's got an upward trajectory now, but plan out your trade in terms of this. But it's just like any of these other things that are rallying for a couple days. It's got momentum. It's got eyeballs on it right now. CEP is the ticker. So I know like people want to talk about it, but it's the same story that it's like, we could go over the particulars in it, but it's like, just like what happened with Newsmax too. And Webull, it's got the momentum and it's got the eyeballs on it. So if you want to play momentum, that's a name for you to kind of think about for today. I could try to give you a support level, I think, or just looking on the 5-minute. Right now it's trading inside its value area for the day. For another leg higher, watch 33.22. For a breakdown, 25.89. So right now that's a pretty decent range, but that's how the stock is trading. And I would keep your eye on, or maybe set an alert on either one of those levels to play it either long or to the short side.
And just to really deliberately say what the heck is going on here, this is going to be a combination with Tether, SoftBank. They're going to be launching 21, which they are calling a Bitcoin native company. So there you go. Did you guys want to do final thoughts real quick into the weekend? We're a couple minutes over, but I mean, it's nice to get final thoughts going into the weekend. Dennis, do you have any quick words of wisdom or knowledge heading into our weekend
I
here?
think you could have nervousness over the weekend, just not knowing, what the next headline's going to be. This has been a pretty good week for the market, so I wouldn't be surprised if traders book some gains into this week. Just saying, hey, I don't know. I don't want the gains all going away. And like I've been saying, we're in the Steve Miller Band market where take the money and run. Forever cold. So I think that I wouldn't be surprised a little bit of like nervousness going into the weekend if we don't get any crazy headlines that expect Sunday night to go higher then. But I think you could see a little bit of profit taking here today.
We'll just give a quick reminder that Trump is tonight traveling over to Italy for the Pope's funeral ceremony. So he will be arriving in Italy like early tomorrow morning. Just a little heads up. Christian, final thought heading into our weekend here.
Yeah, sure. Watch a couple things to watch for today at 10 o'clock. So a half hour after the open, you're going to get the University of Michigan sentiment and expectations about inflations. Be careful with this. They've been horrible numbers. Like Michigan is really depressed in terms of when these what the readings have been in terms of these numbers. Maybe they're so I don't know what the number is going to be, but that's the pattern. I kind of think that's overplayed at this point, but we'll see. Pay attention to that 10 o'clock number. Also, I wouldn't be surprised to Dennis's point that we chop around a little bit. We've got another big week of earnings next week. So make sure that you kind of look at the road ahead and think about that could dictate the next market move. Thanks, guys.
Thank you, Christian. And thank you, ladies and gentlemen, for joining us here on Pre-Market Prep today. And this week, Dennis and I are going to hop over into the SCN room, StockTraderNetwork.com. We're going to get you set up for the open. We're going to trade together through the open and just after the open. All right, folks, we'll see you next week. Have a good weekend, everyone.